Hello and welcome to Financial Intelligence. In this video, I want to talk about Cathie Wood's take on US inflation. Cathie Wood is the founder and CEO of ARK Invest. Cathie created ARK in 2014, focusing on managing active stock portfolios in an ETF format. Her flagship Ark Innovation Fund has returned an average of nearly 40% annually over the past 5 years. These days, US inflation is a hot topic, and there are many people who predict much higher inflation rates in the United States in coming years. Investors particularly are concerned about the impact of inflation on their portfolio and are continuously looking for ways to hedge against inflation. However, Cathie Wood thinks differently about this matter. She actually thinks that the most imminent threat to the US economy is deflation and not inflation. In a recent article and follow-up interviews, she has laid out her perspective on US inflation and why she thinks that US inflation is not the biggest market threat. She has also elaborated on how she has positioned her portfolio to benefit from her hypothesis. If you like the type of content that I provide, subscribe to this channel and give this video a thumbs up and hit the notification bell so that you don't miss any of my future videos. Personally, I both agree and disagree with Cathie's analysis. I think that she brings up a lot of great points, but at the same time, she is a bit biased. She also does not take into account the impact of monetary policies of the US government in her analysis. In this video, I'm going to first quickly cover Cathie's analysis about US inflation/deflation. In this second part of the video, I'm going to share with you why she is missing some of the important factors that can influence the inflation rates in the US. In the third part of the video, I'm going to share with you my thoughts on what the most likely outcome is going to be in the future. Part 1. Cathie Wood's analysis. In her recent article, Cathie Wood has pointed out that inflation is not the biggest market threat. She has offered 3 reasons for her argument. First, Cathie points out that there are many innovative companies out there which are trying to disrupt different industries such as the energy and financial sectors. For example, she thinks that cryptocurrencies are going to disrupt the financial sector and renewable energies are going to disrupt the energy sector. As a result of these innovations, she argues that many products and services are going to get cheaper, which is going to cause deflation. The second point in Cathie's analysis is about companies who have short-term oriented, risk-averse shareholders. These shareholders force such companies to concentrate too much on buybacks, dividends, and boosting earnings at the expense of innovation. She argues that with aging products and services, many of these companies would be forced to cut prices to clear inventories and service their bloated debts. Finally, the third part of her argument is based on the fact that during the pandemic, there has been an inventory buildup in anticipation for major supply chain disruptions, and as a result, most companies have accumulated a large amount of inventory. She argues that there's a lot of double and triple ordering taking place. She predicts some deflation because the commodity prices are going to drop in the next few years as companies are going to need to lower their inventories. Part 2. Unpacking Cathie Wood's analysis. First of all, I give Cathie Wood credit because she's looking at the deflation side of the equation rather than just focusing on the inflationary forces in the economy. Many people are so blindsided by the Fed's money printing practices that they assume the inflation is going to pick up very rapidly. However, Cathie thinks like a maverick because she has not given into the dominant narrative. Having said that, I have two criticisms about Cathie's analysis. The first one is that she overestimates the impact of new technologies such as renewable energy and cryptocurrencies. I think she's a bit biased because most of her portfolio is focused on these kinds of new technologies. For example, renewable energies are not going to completely disrupt the energy sector because oil is such an essential part of our economic infrastructure. Petroleum products are required for making the chemicals, plastics, and synthetic materials that are in nearly everything we use. Renewable energies might reduce the demand for gasoline, but they will not reduce the need for other oil-based products. As another example, her argument that the financial sector is going to be disrupted by cryptocurrencies is too optimistic. Cryptocurrencies are not as disruptive as people think they are. When was the last time that you personally used cryptocurrencies to make a purchase? The share of cryptocurrency usage as a percentage of total transactions happening in the economy is just minuscule. My second criticism of Cathie's analysis is that she doesn't take into account the fact that the government has an inherent interest in creating inflation. That is because the US government owes a lot of money, and the only way for the government to be able to pay its debt is by devaluing the US dollar. Deflation will increase the value of the US government's debt and is going to make it harder for the US government to pay it off. This is something that the US government cannot possibly allow. Therefore, the government is going to adopt monetary policies that are going to intentionally create inflation in order for the government to avoid delinquency. Part 3. My view on inflation. In summary, I believe that Cathie Wood is correct in assuming that there are many different deflationary forces out there that are counterbalancing the inflationary forces. However, I think that the US government has no choice but to deliberately create inflation. Therefore, the rate of increase in inflation is going to be slower than what a lot of people anticipate, because some of the inflationary forces are going to be absorbed by their deflationary counterparts. As a result, I believe that inflation is going to indeed increase, although at a slower rate than most people think. I hope that you liked this video. If you have any recommendation or suggestion, please add them in the comment section below. Don't forget to subscribe to this channel, give this video a thumbs up, and also hit the notification bell so that you don't miss any of my future videos. Thank you and take care.